what I find interesting about what you're saying is that your whole strategy regarding leasing does not really include the accounting treatment. So as we move in the next couple of years from FAS 13
Right.
to IFRS,
Right.
where everything is going to come onto the balance sheet,
Right.
I don't think you're concerned about that because you don't do it just because it's an operating
Correct.
lease.
So personally, I don't care about the accounting treatment per se, because again, I look at it purely from an economics point of view. This is a cash flow analysis that I do based on pure economics, what generates the most value to the shareholder. Now, I'm sure that I have people in my own company that would disagree with me, that the accounting is more important than anything else, and the fact that we can keep an FMV lease off balance sheet has some perceived value to them. Personally, I'm not sure that that's the case at all, because to your point, even if I have to put it on my balance sheet, I still get the same kind of cash flow benefit that I just described. So even if I have to take the example where I have a 3-year 0% financing deal, again, why wouldn't I be willing to put it on my balance sheet for 3 years and have it bleed off? Because again, I still pay no financing charge on that money. It's free money. And again, I know enough about the whole leasing business that again, there's nothing free about it, obviously. It's a blind discount offered by the manufacturer to the financing company, and that's how they get to where they need to be. But so I need to decide in the purchase scenario, so how much effort do I need to expend to be able to beat the crap out of the manufacturer, pardon the French, the manufacturer, to get him to give me the additional 8% discount that is roughly the cost of funds on a three-year deal, to get to the same point at the end of the day on a discounted cash flow basis. I'm saying if they're offering it to me without even asking for it, it ain't worth it. It's not worth the effort of going back and trying to beat up the manufacturer to get that 8% discount. Let them give it to the financing source and then take advantage of it through the fact that I get to spread my payments over the next 3 years. It makes more sense to me.